Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk to you about Digital Turbine. So we're going to talk about what Digital Turbine does, we're going to talk about the ad tech sector in general, we're going to talk about its growth rates and particularly focusing in on its guidance. Finally, we're going to talk about its valuation. So we've got a lot to get through, let's just get started. So this is something that's quite interesting that I found, that ad tech companies have kind of picked up slightly in the last several weeks, and it's a bit difficult to discern this, but the purple line is the Nasdaq, and you can see the Nasdaq's kind of had a bit since really the back end of September. It's kind of just lost some steam slightly. High growth has been kind of like not really appealing to investors right now, but what you see is kind of like from the lowest market cap, which is Pubmatic, which is still at negative 4%, and then as you migrate, you got Magnite just below 6%, and then in purple there, magenta there, you got just above 6% the Trade Desk, and then you got the one outlier, which is Digital Turbine, and that's up significantly. That's up 35% in the last month. And why is it going up so much? So let's just get stuck in, right? So here's one thing that I want to highlight, okay? So the growth rate for Digital Turbine on an organic basis, as if they'd held those acquisitions that they made since the previous year, would have been up 104% year over year, okay? So very strong growth, okay? Everyone can agree on that. What is kind of off-putting is the guidance for next year. So the guidance for next quarter. So the guidance for next quarter is pointing towards 306 million, okay? So Q2 22, 306 million. Now, if we look on a pro forma basis of what Digital Turbine did for Q1 22, it was 292 million, okay? So it's just pointing towards 5% acceleration from Q1 22 to Q2. So this is not really aligned with the high growth, disruptive narrative we've been kind of come to believe from Digital Turbine. So investors, when they saw that at first, they were like, okay, I'm out, nobody wanted to get involved in this company. So what does it actually do, Digital Turbine? So the short way to explain this is it helps brands get noticed. So if you're a brand and you want to get on a user's phone where, the user's spending a lot of their time, you would pay Digital Turbine. If you have a compelling app, let's say Uber or your Candy Crush or Pandora or whatever, and you want to get on the user's phone, you'd pay something like Digital Turbine, and you'd know that, for example, you'd get $4 out of that user. It's worthwhile to pay something like Digital Turbine $1. It makes a lot of sense. It's high return on investment. So for advertisers, that's really something that's very, very attractive for them. And what you can see here in the graph, in this illustration here, is that historically, Digital Turbine was getting the majority of its revenues from pre-installs. That's the legacy segment. That means you get a new phone, you install the operating system, and then it would surface some apps in the background, 6 apps or whatever that was chosen by Digital Turbine. But now Digital Turbine is moving ahead, and it's got more ways to connect up with the user. One such way is that red arrow there, is single tap. Single tap is where you're navigating your social media, whatever, and it comes an app in the background, and you just scroll down, tap it, and without disturbing your experience with that website or that application, whatever, it's downloading in the background. So it bypasses you going into, let's say, the App Store or whatever, and it's very, very seamless. And for the brand, this is very, very attractive because it's not going to lose a lot via the conversions. It's not going to lose a lot. So pretty much relative to other ways of getting up with the user, that advert has a very high conversion rate. So, Digital Turbine charges you a bit more for that, but it has a high conversion rate. So it makes a lot of sense to go via the Digital Turbine route. Now, just for context, okay? So let's just, for the sake of discussion, compare this to ViantSource, okay? I'm a value investor, right? So for me, valuation makes a lot of sense, and you can see that even if the market sometimes gets kind of slightly weird at times, over the long haul, it really works out quite nicely. So here's some context, right? So over the past 6 months, Iron Sources made approximately 6% free cash flow margins, okay? So if you look at the capitalization of intangibles and all that kind of other stuff that they add in there to the cash flow statement, you get 6% free cash flow, 6 months, okay? Over the same period, Digital Turbine has made 12% free cash flow, okay? Both companies are kind of expected roughly to grow at the same pace into next year. Yet, in the case of Iron Source, it's priced at approximately 16 times forward sales. So, 16 times forward sales, 6% free cash flow margin, growing at the same rate. On the other side, Digital Turbine is priced at just 6 times forward sales for the same rate at approximately double the free cash flow margin. So, which is a better investment? For me, I think, I have a bias here because I'm obviously I'm long Digital Turbine, but I mean, for me, this makes sense. So that's why Digital Turbine is resonating so well with consumers, and it's already in 1.8 billion devices per month. So I don't think that it's a very expensive stock, even though it's rallied significantly in the last month. It's up 35%. So if you want to find out this type of stock and other stocks that I'm interested in, don't forget to check out my marketplace. It's called Deep Value Returns, and you can come on board and I help you become a better investor. I provide a framework for you to think about investing as a whole and how to grow your savings over time. Okay, so with that aside, hope to see you next time. Okay, everyone, see you soon. Bye.